What is up, everybody? Bronx Viking here. Hope you all had a great Labor Day weekend, a great summer. I don't do these updates too frequently for GameStop, only when I see something really noteworthy occurring or interesting on the chart or the flow or news in regards to the company. And we definitely saw that happen over the past few days. So this is going to be my breakdown of what I saw come in with flow, where I see we can possibly go from here, levels I'll be watching. As always, this is not any kind of financial advice or, telling anybody to buy anything, hold anything. Just always do what's best for you in your port. I'm always going to do what's best for me in my port, but definitely some interesting stuff to go over. So let's have at it. So GameStop, two really strong back-to-back days on Thursday and Friday off the back of Wednesday's 8K filing, terminating their lines of credit with banks, letting them know that, and shareholders know that they're effectively going to be operating off of their own cash that they raised off of the offerings, the $4 billion off the last two pumps, and any other proceeds generated from the business going forward. What that can mean for the company, there's lots of good speculation and breakdown on actually Supersonic from some attorneys, and what they think can mean in terms of a possible dividend or a share buyback or anything along those lines, maybe a merger and acquisition. So, in my opinion, that's what really possibly sparked this run. And it's something that was kind of overlooked at first, overstated. But the same thing was kind of said about when Ryan Cohen extended his deal to remain CEO of GameStop for a year back here in April. That really kicked off the last run. Obviously, it was Roaring Kitty that just completely blew the lid off it. But he started buying after the Cohen news, so that's what we're kind of trying to figure out now, right? Is this Roaring Kitty again, driving the price up through options activity? And before you start hearing any comments of he didn't do it, it's not him, blah blah. Like, okay, shuck, yeah, he's not controlling the price himself. However, he's a catalyst, so calm yourself. So what we saw happen back here was, you said the Ryan Cohen announcement. We saw a change in the chart structure, right? We're in a prolonged downtrend for years and years and years. The news came out right around here, and we saw a nice reaction off of it, and then it kind of fizzled out, and then we saw an even bigger reaction kind of come in, and this is all off the back of options activity, right? So let's get into the flow that did come back in here around, end of April 2024 into early May 2024. And I cover this more in depth in my first few videos, but I'll just do a quick catch up. So we'll start with the 20 Cs. Everyone knows about the $20 calls for June because honestly that's the one that Roaring Kitty DFE disclosed himself on his Reddit page, right? But people want to know is, well, how did he get $65 million or whatever it was to buy more shares of GameStop, to buy all these calls in the first place? And it's my opinion that, once that Ryan Cohen news came out in April, he was buying calls back here, right? He was buying these 12 Cs, right? April 24th, April 24th, little over $320,000 worth, right? We have to go way back because this is now here. Yeah. Right there. So huge outlier in the price action on the 24th. Sold him off over here on May 15th. And then he kind of, as he was reshuffling and grabbing those 20 Cs. Why do I think or feel so confident that he bought those $12 calls when he never directly announced it? Well, so remember the two numbers I'm telling you right now. $12 calls and $20 calls, right? The 20s we know of. For those of you that were around for his original purchase on GameStop back in 2021, the two strikes he had were $12 calls for April expiration and $20 calls with his leaps, right? And these were purchased back in January of 2021, right? But he's very cryptic. We all know that. He likes to leave these breadcrumbs for you to find. So $12 calls in April and $20 calls, right? So, I mean, think what you will, but, and $5,000 blocks too, right? So 5,000, 5,000. Was this him also buying these even further out the money ones, 25 and 30s? Probably him as well, right? In my opinion, with whatever cash he had on hand from the last run, whatever proceeds he had from that. So remember those 12s and those 20s. So we're not seeing anything like this quite yet, where, 5,000, 5,000, 5,000, right? These crazy blocks coming in, millions and millions and millions of dollars in at the money calls at the time, right? So his first MO was buying out the money with those 12s when the stock price was around 10 and change. And then now the most recent one after that was the 20s in the money, right? And he's continuing to buy those even as the price ticked up and ticked up and ticked up. We saw him coming in, right? So 25, 22, 23. So he was still buying these, and he bought obviously a ton. And that's what really helps drive the price up of the stock. Big money notices this. They see tons and tons of call options coming in, and it's a good sign for them to exit their shorts, to get out, or to ride the wave, right? Not every fund is going to be a short, right? So you see institutions start to come in, smaller institutions. It doesn't have to be a major one, right? Sequoia, Citadel, Susquehanna, BlackRock. It could be, there's tons and tons of mom and pop shops out there that can also capture the momentum and ride the wave. So now that we have that out of the way and seeing that ramped up action activity, that small surge in volume, let's get to the past few days and what we saw. So this back here, right, was August 28th, the day after the 8K filing. Like I said, nothing was really going on here. There was no real flow. Net call premiums actually sold off down $1 million, right? So looking at the chart as well, let's go back and forth here. Bear with me. And you see, right, calls were selling off, as was the price, right? There was no positive gamma pressure. There was no options coming in to really drive it up. But then, right, Thursday we start to push up. And what happened on Thursday, we had a really good call premium day. For those of you that know me, that when I post a flow, and this chart specifically unusual whales, the net premiums, the call premiums, I don't like posting things nonstop because, like I said, a lot of it's to be ignored. Like, people are posting like 300K days, 200K days, 100K days. Like, look, there's no pressure being applied on the stock. Just look at the chart, right? This is the stock price, the share price here. And then look here, as calls are being sold off. Look at the trend, right? And then when you have massive call buying come back on the 29th, look, it's driving up the stock, okay? So that's why you don't need a ton of actual share volume to come in on the chart, right? Because look, I mean, it's still relatively low. It's not like back here, right? But when you have all that positive call pressure, and like I said, just sending a sign to start some short covering. So, and we saw that on Thursday, and then we saw even more continuation on Friday, where we just blew through the roof. I mean, this is the 14-day chart, right? So look, it's by far the biggest surge in calls in 14 days. Go back 30 days, as those of you that follow me on Twitter know. Same thing I said. This is the best volume we've had in well over 30 days, and it is. Back to July 24th. I wish Unusual Whales went back further with their net premiums so we can really get an idea of the context of how big these are. We can kind of take a peek with overall options volume. And so, I mean, you can see candle premium. So total calls for that day, 316,000 calls, 54,000 puts, a little less the day before. We can go back, like I said, 60 days, back to June. And you see, like, in the context of the overall squeeze in May and June, we're still very low. But there's a clear trend, right? This is flat, and boop, popped right up, and the stock price went with it. So in order to get to like a real squeeze level, we really want to see like this kind of volume back here. And this is, 60 million, 300 million, a billion, 700 million, 800 million in call premiums. So we got a long way to go. There's only 32 million on Friday and only, roughly 20 million, 19 million on Thursday. But that just lets you know, if we're moving 7 to 10% on those little premiums, it's a good sign so far. what's really going to take it up a notch from here is if there is any real catalyst coming around the corner. Like I mentioned, the first catalyst, or the most recent catalyst back in April and May, was really DFE, right? Roaring Kitty, like I said, you had the Cohen announcement, and that could be similar to the 8K right now. So what's going to be our Roaring Kitty catalyst? Could it be him again? Yeah, possibly. You never know. Could GameStop or Ryan Cohen themselves say something, introduce something, whether, again, it is a dividend or an acquisition of a company, putting that $4 billion to use? That's all speculation. I don't know, but it will take some sort of catalyst of that magnitude, in my opinion, to really see a huge spike where we're getting these, 50% gap ups, 100% days, right, etc. The really, really fun squeeze that we saw back in the spring. So let's jump over to the chart. And again, those of you that follow me, you saw that I really wanted that $23 level recaptured, reclaimed, right? Because back here off this double bottom, the neckline would be right around here, that 2270, but there was still tons of like supply and resistance anywhere from, like I said, 2270 up until about the 50-day moving average, which is this line right here. All right, I posted about that as well. And we stopped right at it in the early portion of the day. Let's get to the 15-minute chart before the pennant breakout, right? So that's the 50-day right there. And we had this sell-off, but if you just look at the volume profile on this, we had really great bullish volume on really widespread candles, right? It means the candle body. So it's legit. It's legit buying pressure. And you could kind of see the pattern all the way from the run-up throughout Thursday into Friday, right? Like something that should jump out at you, looking at these bars over here. Just color that up. I mean, look at like I said, the buying bars compared to the sell-off, right? They're really low volume on these candles. That's letting you know it's kind of fugazi, right? There's not that much sell pressure going on. And then you're kind of pinned back here, but it's still holding, right? Something, whether it's options activity, actual call buying, stock buying, whatever it is holding this near $22 level. And we flatten out for most of the day until Friday. And then we get to the afternoon. And as this is going on, the call premiums continue to hold. Right? So I said we're flat here. At this point, we're up 1 million, which is still one of our best days for calls. Like I said, in at least a month, few weeks, whatever it is, right? And they're holding. They're not selling off. And also puts aren't coming in either. No one's shorting this thing on that side. And then what happens? Then we get a nice little breakout. So the breakout occurs before the options volume, the call volume comes in, and then it starts to drive it up along with it. And this is when we ticked the 50-day moving average. And off that hard tick, something that should jump out to you is calls were not budging. They were not selling off. And usually, like I said, when I track premiums for other names, whether it's NVIDIA, Tesla, SPY, whatever, if you see the stock selling off, the share price selling off, and calls dumping, it's a pretty good sign that it's legitimate sell pressure coming in. And we didn't see that. So this little dip right here is this bear trap that I highlighted, right? And the way I caught that too is, like I said, obviously the calls were holding on, as I mentioned, but look at the spread of this candle. It's a huge drop, and the volume wasn't even close to the volume that was driving it up, and that came in afterwards to keep the price propped up and apply pressure on that $23 level. So we got into this supply zone, right, where we weren't closing any candles, right? We popped through here, UTAD up thrust after distribution, and just sold right off here. Like we came above 23, trapped anybody that was trying to chase calls on the break of 23. And that's why I always say I always like to see support built out above these key levels and real buying pressure come in. So here, right, you had a little pop, not crazy volume, and then nothing came in to support it. So just capitulation, sell off, trap below 23, made another attempt to get above it, and then just sold off again. Here was the exact opposite, right? Great volume came in, low pullback volume, good volume to keep pressure towards that 23 again. And then we started riding the 15-minute 9 EMA. That's this red line here. Held that, closed candles above it, closed candles. So bears and shorts weren't able to drive the price down. Drew that, shared that out. And then at the very end of the day, we saw that great pop, biggest volume of the day, which is pretty standard, right? You usually see your best volume of the day on the opening candles and on the close, right? Just because people are repositioning, they're taking profits, or they're getting FOMO heading into the weekend, right? So there's a lot more activity coming in. People know it's their last chance before the holiday weekend to grab a position. And the flow also backed it up, right? So this entire time, even on this dip right here, people saw the flag consolidation like myself, the pennant, and we're still adding that. And then you just see the price, like I said, rip with it at the very end of the day. So now we'll get to kind of some more specific flow, the ones that really stood out to me. Let's see. Yeah, so on the 29th, we had these 2350 Cs come in for 920. So 920 expiration, it's after GameStop's earnings. It's a monthly OPEX, options expiration, which means it has good liquidity on the chain. The spreads are usually going to be pretty good, but this one in particular, this even had a wide spread. I remember sharing that. It was like the bid was 100, the ask was 140, and they filled all at the ask. So they're really one of those contracts, right? And then I'll get to Larry in a second. After that, that next day, right before close, we saw calls come in for that next day, that 0 DTE. I think it was the 20 Cs I highlighted, right? If we get to it. Let's jump on the flow. So this is actually on Friday. We'll get to the 29th. Yeah, these ones right here. So someone was loading up these in-the-money calls for Friday. So whoever that was very confident that we were going to see some continuation, because, I mean, you get any kind of gap down on these, even though they're in the money, yes, and the delta is relatively high on them. I mean, it's still a real ballsy move and a real confident move. So that to me was like, whoa, someone really feels good about what's going on here. And now, do they know something we don't is always the question, right? Are they convinced that something different is going on, that really good options activity is coming back, that they believe or think DFV is back, they know something that's going on with Cohen and GameStop? Do they get word that Larry Chang is heading to GameStop headquarters in Texas to possibly vote on something or agree on something or discuss something fundamental with GameStop? We don't know that, right? That's all just conjecture and speculation. But we do know from our standpoint as traders, looking at the chart and watching flow, is that the sentiment is definitely shifted. So then we get to Friday, and you started getting some really interesting orders starting to come in, specifically these two right here. These 21 calls, these in-the-money calls for that same September OPEX post-earnings, right? And this one to me, it was over 2,000 and filled for 19.99 right there on the size of the block, but it was over 2,000. Yeah, 2061. I mean, it could have been 19.99 just in that one block and then filled in a few others around it as someone else was buying the same strike, but this feels a little bit more like what could be a DFV buy. He does like to give people kind of like these warning shots before he just starts going, full speed ahead, buying all these contracts. So like I showed you guys back here, right in April, he bought these calls before he started dropping millions and millions. And we said maybe he didn't have the millions yet, but he likes to give, like I said, go for an initial position and then really just drives it home. And, my speculation is always he wants retail to get in on this, right? He wants to give the little guy a shot. So, again, take for that as you will. But that's just my opinion and my speculation on why he does possibly. So, anyway, so those 660K worth of 920, 21Cs really stood out. And then shortly after that, 6 minutes later, we see these 30s, right? And that also fits the bill for what he likes to do with his options. Right, as mentioned, with his initial position back in 2021, right? He bought $12 calls and $20 calls, right? He takes two positions. And yes, one was a leap, and one was a little more short dated, 4 months out at the time. But like I said, no pun intended, but pun intended, the game has changed this time around, right? Like, the contract's more expensive. There's a lot more eyes on the stock right now. It's not really worth it for him to buy leaps. He's just so much money tied up in shares. Why is he going to pay, $800, $900, $1,000 for an out the money contract while they're so expensive? It's not really worth it. It's only worth it for him to play these short dated things, these short dated calls, and that's again why back in April and May he was buying for 1 month out, and then again in May he bought for June 1 month out, and that fits the bill with what's going on right now. Is he's buying, or someone is buying for 1 month out, because that's the only real value in my opinion on these contracts. And look at this, the bid ask is really tight right there, 104, 105. So if the position moves against him, he's not really going to get smoked. Yes, they're out the money. There's no intrinsic value on the contracts, but like I said, it's not like a bid ask of like 150, 100. And if the stock has bad news or something, he has to sell at a 50, 60% loss almost immediately because he can't get a fill selling those contracts. So these 30s really, really jumped out. And they kept getting hammered, right? Here at 2:48 in the afternoon, they got filled. And then 3:05, a little bit later, they got filled. We'll check the open interest come tomorrow morning when market opens. But throughout the rest of the day, I mean, these just kept getting pinged. And you see, for the most part, they were all at the ask, right? The red means they're at the bid, most likely sold. But see the green, I mean, ask 550, ask 1300, ask the 2021. So really good options activity driving this thing up. And again, could this be an institution? Could this be a lot of retail FOMO? It could be, and I think that's what the rest of these ones are over here, these random 26, 27s, 23s, 17s, 2450s, right? Like, it's all across the board. Like, these are your retail traders coming in my opinion. But these repeat dings, this is one person, one individual. All right, so now let's go back to the chart over here. On the weekly look, right? So not only was that 2350 level, the 50-day moving average, it was also kind of a key support resistance flip, meaning that back here in June, this 23 and change, 2326-ish, acted as support, kind of support over here, right? And then it just knifed right through. And we popped back through it on Friday. So typically, you'll come up on low volume, you'll reject these support resistance levels, and then you'll sell off hard. So as long as we kind of gap up and remain above this $23.50 level, then in the next few days, I'm feeling good about a move to at least 26, right? And it doesn't sound crazy. I know you guys want me to say $50, $45, $100, whatever. I'm not here to hype up that. I'm just looking at it like any other chart, level by level. So, and even a move like that, a nice 10% move, that's fine. And then from there, you want to base 26. You base 26, then you get to 30. And 30, lots of supply up here. It's a huge psychological level that a lot of people, including myself, like, remember when it got to like 29, 30, we're all waiting for it to base there and get a close above that. And it just couldn't, right? So a lot of supply from anywhere from 29 all the way up to 34. So that's going to be the next tough level. But for now, like I said, work on holding 2350, then make a push to 26. Something else interesting. One last thing on there. So if we get a gap up above 2350, it'll be a candle open above that 50-day moving average, which will be very strong in my opinion, because that's what we had happen back here on the daily 9 and the daily 20, this yellow and these red lines right here, which are about to all cross back up. You see, when you open a candle above that and use it as support, it becomes a nice launch pad to kind of push right through up to that next level. So that's what I want to see. And you can see the support resistance flip a little more clearly here on the daily chart. So the fact that we didn't, I mean, came up here, tried to get to it and rejected, tried to get to it and rejected here. The fact that he said we're applying pressure on it is a good sign. So just want to see that gap up. And if we gap up at like 24 and change on tomorrow, Tuesday, and we pull back a little bit, I want to see, again, that 2350 minimum, like 2330, 23, even 2310, but it just has to stay above 23. You come back, you back test 23, it starts acting as support again, like back here. That can start our next little push up and slow grind up, depending if we get a catalyst or not, if call options keep pouring in or not, back to that $28, $29 level. And that'll be a really big deal. So let's get to the daily, the MACD, like I was just about to touch on. Sorry, not on this chart. There we go, my circle's down there. So we did get a MACD cross up, which, again, an indicator is just an indicator. But, you know, when using confluence with several other things, like I said, like volume, like call activity, it can be a very useful tool. So just like back in April, like I said, with the Cohen, the first round of DFE call buying, we got a MACD cross up there. We're riding the daily 9s and 20s, just like I mentioned, back here, and then we got a good catalyst push into here, right? So we see another one here. We got a daily MACD cross up on that Thursday, and then we got the good follow through on Friday. We did have one back in July. It was short-lived, lasts for a few days. We got to that supply zone, right? That resistance around the 29 as mentioned. Couldn't hold it and rolled back over and started another downtrend to test more and locate more demand and liquidity for the stock. We had a nice pop through here back in June. I think this is when they announced the first round of dilution, or the offering was completed, right? So catalyst, relief, daily MACD cross up. So MACD has been relatively reliable with GameStop. I'm sorry, we did have one back here that I did not highlight, right? So cross back up there, but that's when it was trying to break out above this 23 and couldn't, right? So the fact that, again, we're pushing through, we're holding this, we're applying pressure, we didn't get smacked really hard off the 50-day. Everything is coming together nicely for another run. And again, the size of that run is all going to come down to if we get a catalyst or not. It's really that simple. Now, could this activity also be people trying to front run a bullish earnings? Yes, no doubt. People could, like I said, be getting their lotto positions now in hopes that GameStop has a great earnings, blows the socks off everybody, analysts start coming around on the company, and IV starts creeping up, right? The contracts you bought become more valuable because a bigger move starts to get priced in, depending on earnings, whatever the implied move is. I'm not sure what it is at this point in time, the implied move for earnings. The options market decides that, and I'll share that update with you guys once it is kind of released and forecasted. But for now, like I said, there's a lot of things around the corner possibly brewing. So we're just going to keep on tracking the flow, unusual activity, strong call premiums, strong price action on the chart, and that's really all we can do. Never buying anything off of just a theory or tinfoil or speculation. Like you said, you come with a theory why the chart's moving, why the price is moving, but at the end of the day, you want to see that price action and call activity really backing up whatever position you took, whether it's to the upside or the downside, right? Like I said, whoever bought puts back here made a killing, and congrats for you. Seriously, if you bought puts back here in the 60s and rode that all the way down, I have nothing wrong with that. I really, like I said, if you're making money off this thing, it's the stock market. That's what we're all here for, is to make money. So that being said, that's all I got for now, guys. If anything changes, I will obviously add more updates, more videos, but for the most part, I'll just keep doing what I can on Twitter between my work in the Discord, and hopefully this helps you guys make the best decisions for you and your portfolio. So thanks very much. Enjoy the rest of your afternoons, your evenings, and I'll see you guys bright and early for hopefully a really big gap up. Cheers, guys. Thanks.